I like your red, yellow, green signals for your trading. Can you go into a little bit more detail on exactly what each mean and how do they change specifically? What triggers, going from a green to a yellow?
Okay, that's a good question. And we have pull up the visual here that we use for the signals. This is just a sample. So we have a stock market, right? Fast, slow. Bond market, fast, slow. So in this case, we have fast yellow for stock and slow green, and a green for fast on the bond and red slow, right? So
Hmm.
what happens is, first of all, there's 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 two different markets, stock and bond, right? And those are important. They're treated differently. Everything's related, in the end, right? I mean, it's kind of crazy how things can be related. However, we treat those as two separate universes. And then secondly is this fast versus slow, which is in both of them. And so a fast signal means that we're responding more to shorter term data, right?
Hmm.
We're going to make more trades because of that. It Historically, when we look back and back test our algorithm, we do have a better rate of return on the fast signal than the slow. Uh, but lots of trades to make that happen. So we don't want to do that outside of an IRA or a 401k or a Roth IRA or an annuity or something where we don't have to account for those trades,
Yeah,
right?
because when you do something too quickly with a taxable account, you're going to add more taxes, and
Yeah.
that taxes could wipe out the actual
Yeah,
profitability.
even if you're taking some losses, it's still kind of a pain, right? You got
Hmm.
a lot of things to put on the tax return and those type of things. So that's where the slow signal comes in, looks at longer term data and moves slower as far as that goes. And so we'll make less trades, doesn't have the same rate of return that the fast does. Now, the difference in light color is important to us too, because green means go, right? We're looking at the market is moving. We want to get in there,
Hmm.
and we want to be at least at the level of the market in terms of the aggressiveness that we're taking, if not slightly higher, so that we can kind of really participate in that upside, right? And
Hmm.
we want, if the market makes 10, we'd love to make 11, whatever it might be that happens. And so then we might get a yellow trigger, and yellow is just just like it said, caution. We'll move into things that are more defensive, higher dividend paying stocks, utility stocks, those types of things, consumer staples. And our system kind of automatically identifies what's coming up to the top during those periods of times, and that's generally what it is. And for bonds, that would be shorter term bonds, inflation protection securities, those types of things that might come up. And then when we get a red signal, it depends on what happens, and we've got a combination, but it can lead us to basically going into T-bills with those holdings for that period of time. Now, this is a little controversial. Most people like that kind of buy and hold concept, but we specialize in retirement. A lot of our clients are already retired, and none of them want to go through something like the Great Depression, where the stock market dropped 86% and took 14 years to come back,
Hmm.
right? So we're trying to make some preservation here. We have people coming to us that like the system because they're worried about the debt ceiling argument. And what are you going to do? Well, our system will automatically trigger, and theoretically, we could be in T-bills if there is a big collapse caused by the debt ceiling default or something crazy. I don't see that happening, but we're ready for whatever might happen. Actually, the things that tend to be the most dangerous and the most dramatic are the things we're actually not talking about.
Hmm.
Right? We weren't talking about credit default swaps when Lehman Brothers failed. We are now, and that created a 30% stock market drop. Right? It's the things that we don't know about that are actually the most damaging to the stock market and possibly even the economy. But we're able to capture those because we're looking at the price of the stock market. So what drives these? Well, we have an algorithm that we are developing constantly. One thing about the stock market, it changes all the time. So
Hmm.
you're always having to update your algorithm and challenge your parameters and such. And so we've created kind of an algorithm that goes behind the scenes and kind of chooses. And so right now you can see we're green on the stock, right? Uh, and in the bond, we are yellow green, right? Currently right now too. So that's where we've got our our data comes from this whole process that we have behind the scenes. I'm not going to give all the details on how that works because it's really our proprietary,
You'd probably
secret
fall
sauce.
asleep if you weren't interested in it.
That's right. But it's a great question. Hopefully that helps. If you're looking at this, and I now post these on every daily video that we do, just keep in mind, if you see green and green, that's a good sign, right, for the
Yep.
stock market. If you see, the fast and the slow is kind of short term versus longer term, right? And so, look for those seagulls for yourself as far as that goes. But they've been very effective for us. Now, the key is to understand on any type of system like this, it doesn't have to work all the time. Matter of fact, our signals are often wrong. You get a little bit over 50% right is great. Even 50.7% is actually pretty awesome. But the way it really works is that when it's on, the market's falling, let's say, and you're sitting in T-bills, you're now gaining against the market dramatically. Or the opposite, the trend is up and you're green, 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 and you're going and you're in. And you're maybe making a little bit more than the market on those upsides too. And so that's, on the other ones you can lose money and, cut your losses quickly and let your winners run is essentially the way that this system works. So right now we're getting a lot of churn. There's no doubt because there's these conflicting, pieces coming together. But eventually the trend will establish and will be off and running. So anyway, that's how that works. Great question.